Analyzing the balance of power between the bulls and the bears is going to be crucial for you to make money from the markets. And today I'm going to give you two practical ways of identifying that power so you know should you be betting long or should you be betting short. So if you like today's video, like, subscribe, hit the bell notification. Let's dive into the bulls and the bears. The key thing you want to take away from today is that the markets are driven by fear and greed, and it's these bulls and bears that are fighting it out all the time. And the market price is just a consensus of everyone involved. So we're going to look at two factors that help us identify where is the trend. Is it up or is it down? So we're going to use momentum and we're going to use pattern position. And we're going to use Bitcoin as an example because markets tend to move in fives and threes. And down here is a textbook 1, 2, 3, 4, 5, followed by an ABC correction. This happens on the way up, and it tends to also happen on the way down. So you can just flip the scenario. So let's dive into a live chart with Bitcoin. And what we see with the market right now with Bitcoin, this is on an hourly chart, is look at this. We got a nice 1, 2, it looks like a strong 3, now a 4, and then a final part of a wave 5. So what the pattern position is telling us is we may be coming towards the end of a local trend. So we should be anticipating some type of reversal. But we want to coincide that with momentum or another factor. And another factor can be momentum, and it's very powerful. So we have this dashboard over here saying that the bigger trend, the daily momentum is strong overbought, meaning that the upside is limited. And that the hourly or the 4-hour chart is a strong bear downtrend and we should consider selling. So what we have now is two practical things telling us be on high alert that we might be at the end of a local trend and we may be seeing a reversal. In other words, currently the market's moving up. Over the last few days, it's been moving up. But because it's a wave, or it looks like a wave 5, we're going to go into a bit more context of this wave 5 in just a second as well. And the momentum is telling us it's overbought and bearish. We're probably going to be seeing some type of movement to the downside over the coming days into the next following week. Make sense? Now, I want to give you a bit of context. We're going to zoom out on Bitcoin, but this is relevant to all charts, whether it's crypto, whether it's the Forex markets, whatever market. What we're talking about, the methodology is the same. We're going to zoom out in a second. But before I do, I just want to introduce you to this dashboard down here. It's very, very powerful, and you can now actually trial it out. I call it the Trend Identifier Dashboard. It's like an executive assistant that shows you where the momentum is, that makes your decision-making process much easier. You can now trial it out for £1, 30 days. If you like it, it's then £9.97 thereafter. Very powerful. I'll give you training on how to upload it. It's for TradingView and a few other factors as well. So with Bitcoin, what I'm going to do now is I'm going to zoom out because I want to go into a bit of context. Because when we're talking about Elliott wave patterns, I'm just going to zoom out a bit more. I just want to get this all into the screen and I want to give you some context. We're going to talk about 2 to 3 degrees of wave counts. And this will make perfect sense to you in just a second. All right, here we go. Bang. Nicely in the chart. All right, this is what we're going to talk about. So just going back into the theory, right? So when we're talking about the bulls and the bears, it's just mass psychology playing out time and time again. But what you want to know is wave ones tend to also break down into a 1, 2, 3, 4, 5 wave structure. So that's the wave 1. Wave 2s tend to break down to an ABC structure more often than not. Wave 3s tend to be a 5-wave structure to the upside. So there's a wave 3. Wave 4s either are an ABC correction or some type of complex correction more often than not. Wave 5s tend to be an 1, 2, 3, 4, 5 of a 5. And then you have a certain degree over here as well. What we're going to focus on is this part here. We're actually going to flip this scenario though, because Bitcoin is looking more bearish. We've had a recent 5-way move to the downside. And this will make more sense to you as we go a bit further into it, because I know everything in life is difficult before it's easy, including this. But what we're going to talk about is wave C's tend to break down to a 5-wave structure. So we're going to break this down. That gives us an indication of where Bitcoin is and what's likely to happen. But the flip, we're going to do the inverse of what we're seeing over here. So let's just go back to the live chart again. And what we've got on our hands, and if I just make it a bit clearer for you, if I can get these lines back on, because we want a practical methodology of identifying where the power resides. Is it with the bulls or is it with the bears? So if we look at the former trend, I'm just going to interpret this into English for you. The former trend is down, right? So we got this 1, 2, 3, 4, 5 wave move to the downside. We were zoomed into this context over here, this part here, and it looks like a nice 1, 2, 3, 4, and a potential wave 5. That's what it looks like. But now when we look at it in the zoomed out context, we're taking into consideration 2 degrees of wave count. This 5 wave move, let me just draw it in like so. Let's just pop in the wave lines over here. This blue 5 wave move to the upside looks like it's actually the end of a wave C, or in the zone of a typical end of wave C. So now what we've got is a potential A, B, C correction. It's not confirmed yet, hence we got this question mark. So what this is telling me is in the preceding days and the next week, we're probably going to see some type of continuation to the downside. That's what the probability is stating. Now we want to have logical entry points, we want to have acceptable capital exposure, risk management, and so on and so forth. But what would be the first confirmation that this indeed is a wave C and it's likely to hold, and that this low down here is likely to get exceeded to the downside? So let's just look at that from a practical nature. Swing lows are very powerful. So wait for a swing low. If the price goes below this swing low, that'll be a nice strong confirmation or indication that this wave C top is going to hold. Now you might want to enter sooner than that. There's pros and cons to that as well. The next stronger confirmation is this wave B low. If this gets exceeded, that'll be an even stronger confirmation. And then if this low gets exceeded, then that's even a stronger confirmation again. And what you want to do is get the balance of getting an early entry in whilst managing your risk, keeping the probability very, very high in your favor. So I just want to summarize this because this is very powerful, but I know it's a lot, right? And it's one of the reasons I've actually created the 4 Secrets Masterclass, how to trade and make money from the markets consistently. We're covering 2 of the secrets today. We're talking about double time frame momentum, and we're also talking about pattern position. There are another 2 secrets that's in the masterclass, and this is a gateway to get into my private community because we do a lot of work, we do a lot of workshops, a lot of training, and there's a lot of phenomenal products that we're introducing into the market as well. So check this out. This is free. It's in the link below. But it will just take your Elliott wave knowledge to the next level. So let's just summarize this. In fact, let's do the 3rd secret, or a little bit of the 3rd secret. It's Fibonacci ratios. One of the key things you want to be aware of is that most corrections actually occur with particular ratios. And I'm just going to do 2 things here. Actually, I'm going to keep it really, really simple. I'm just going to do this one here as well. I'm not going to go into too much depth, but these lines that you're seeing are psychological buying and selling zones, which tend to be very, very reliable. And we haven't actually, when I'm looking at this now with fresh eyes, we haven't actually reached this minimum zone over here. So what that tells me is we're likely going to get some type of move to the upside into this zone. And what I'm going to be patient for is waiting for the price to go below this low over here. Ideally, I want to see this price go over here and then wait for some type of pullback. And then this will be a nice safe time to take a short position. So there you have it. So 2 things that you've got now to have a practical indication on who has the power. Is it the bulls or is it the bears? The bears is clawing the market down where the sellers are stronger than the buyers, and the bulls are when the buying is stronger than the selling. What we're also going to take into account is pattern position. If this low gets exceeded, then that's going to be a stronger confirmation for us as well. So do check out the trend identifier dashboard. It's £1 30 days, but it's a practical way of knowing where is the momentum. Is it on the upside or is it on the downside? And it interprets it for you and makes it very, very easy. So if you like today's video, like, subscribe, hit the bell notification. Let's finish today on a quote. I'm going to go with chapter 5 from my book today, Repetition Being the Mother of All Skill. Leonardo da Vinci. Simplicity is the ultimate sophistication. So you want to find a strategy that works with you and your personality and your risk tolerance. but it has to be mechanical. So it's simple, logical, repeatable, and recordable. It's one of the reasons I love double time for momentum and Elliott waves. If you combine the two with some of the other factors, it can be a very, very powerful resource that you can use long term.